beautiful week. And this is Shocks Capital FX. Welcome back to the channel. If you are new here, consider subscribing. We talk about ICT, we talk about institutional trading, we talk about beat the market maker method, we talk about price action. So if that appeals to you, you can as well turn on your post notifications so that you don't miss a video from this channel. So today we're going to be talking about a very popular and very effective strategy among traders, the trend line strategy. Some of you call it the brick wall. I will be calling the trend line strategy here. So this strategy is very popular and is very accurate, but most of you don't know what to or how to trade this strategy effectively. So here I'm going to be showing you how this strategy can be traded effectively in the financial markets, and we are going to be using this strategy in conjunction with our order blocks, with our supply and demand techniques, with our institutional order flow techniques too. So we will start with structure. So everything in forex, or most of the things in forex, emanate from market structure. So I'm going to be recapping some market structure before we go on how to trade and how to draw trend lines or effective trend lines for that matter. So first of all, we have this chart here. So when we talk about structure, if you take a 12-year-old right now, he or she will tell us that this market structure is in an uptrend. So that's what we are looking for. But from the uptrend, we are looking at the highs and the lows. So if you cannot pinpoint the highs and the lows from this type of a chart, I recommend you use a line chart where you can see clearly the highs and the lows in a market like this. So this is what you are doing if you cannot clearly see the highs and the lows in a market. So after this, what you are going to be doing is, with the brick wall or with the trend line strategy, you are going to be required to know how to draw the trend lines. So in drawing a trend line, what you have to know is you have to draw it from at least two highs or lows, depending on which type of market structure you are looking for. So let's say we are in an uptrend and we are looking at an uptrend structure. We are looking at something of this nature. So what we are doing is we are connecting the lows, at least two lows for that matter. So in this case, I've connected this one and this one. So we are saying this low plus this low, and we are drawing a trend line. So a trend line is any diagonal or non-vertical or horizontal line drawn connecting either two lows or two highs in a market. So what we are saying is we are looking for buy opportunities if we have a trend line of this nature, and we are drawing it from this point, and the third point is supposed to be your entry. So if you connect 3 touches and you're waiting for the 4th touch, yes, it might come, but the probabilities would have swayed away from you. So what I'm advising you, if you are drawing a trend line, you look for the trend lines with only 2 touches to the trend line, either from the top or the bottom. So if you are in this type of a market structure, this is an uptrend, you are looking for buys. So you are good for buys from this point up to the 50% area of the trend, or of the impulse down to the trend line. So this is what we are saying. The problem is most of you just draw trend lines joining two points and they are good to go. They are just waiting for the retest. But I'm here to tell you there is more to it than just 2 touches. So first of all, you need to understand very well your structure and the phase you are in a market. You need to know if you are in a consolidation phase, if you are in an accumulation phase, if you are in an impulse phase. You need to know that. So from this structure you see here, we are kind of having an impulse here. Then we have this consolidation or this retracement arc back to to this point, which is the flippy right here. So that's number one. Then number two, we have this impulse again. Then from that impulse, we also have this accumulation back to this zone right here, forming this law. So as you can see from this, we have formed three laws, or we have formed laws, 1, 2, 3 laws. So what you are doing is you are trading like this. Let's say you are here, let's say your price is here. What you are doing is you are drawing a trend line, joining 1, 2 laws, then you are extending it in the future for you to wait for price and trade that trend line like this. So I like to draw my trend lines using the closes, not the wicks. So that's just me, but you can just draw your trend lines using wicks. But from this video, I'm going to be using laws, and I'm going to be avoiding wicks as we go. So what we are doing here is, this is the first touch, this is second touch. For with your traditional trend line methods, you will be looking for a buy here. There's nothing wrong with that, don't get me wrong, there's nothing wrong with that, but I'm just trying to help you increase your odds of winning your trade. So what I'm saying is, you need to have a situation like this where you have a touch on the trend line, then that area should be having a demand or an order block zone in that area. Like in this area, we have this market structure going up, 1 impulse, 2 impulse, then 3rd impulse, and you are also having this order block in this area. So this is a clean price action view of the trend line strategy. But we can also add some things. We can also add our BTMM template and see what is happening in that area, so that we can really understand what is going on in terms of the market makers. So where were we? I think this one. So if you draw your trend line like this, if you draw your trend line joining these two laws and waiting for this, you will see that in this area we are having price coming back or pinning the yesterday's low, represented by this blue tracer. Okay, let's just go to the M15 and see what is happening exactly in that area, so that we can understand that it's not only the trend lines we are looking for. So this is the trend line, and as you look down here, you see that we have a shark fin in this area. We have this shark fin, that's the first leg of the W. This is BTMM now. Then we have our Asian range 20. We have our Asian range of 20, then a stop and low to the yesterday's low, which is the blue tracer. Then we have price going up and price coming back, pinning again that area. So in this case, you are having a first leg outside the bands, then second leg inside the bands, while it's also being represented as a baseline bounce. So this is what we are doing. We are looking at all the possibilities and everything. And if you look in this area, we're having this, and we are also having this order block here. So if you combine everything, I'm telling you here, the BTMM and the clean price action view, you will understand. Back to our clean charts, let's look at this one. So with this chart here, you see that we are having 2 touches already. What we will be waiting for is a 3rd touch. So this is what is happening right now in Aussie dollar. We're having this trend line right here. So this also helps you avoid fake outs of trend lines. So as you can see here, we're having this first touch here. This first touch, right? Some of you may draw it like this, something like this, but all in all, we're having this fake out where price is going beyond the trend line which you have drawn. So if you were using the trend line alone, you would have been taken out here. But we are talking about adding some supply zones and some order block zones in that particular area. So with this one, with this trend line right here, with this trend line, you see that we have first touch, second touch, then the 3rd touch happened where we have an order block right here. But in this case, we did not have an order block in line with this trend line. That's why we have this fake out, because price is going to retest what the order block in this area, then maybe go down, but you would have been taken out by only concentrating on the trend line. So guys, if you don't know how to use, or if you don't understand anything about order blocks, check out our order block videos on this YouTube channel. You will be helped immensely. So this is what we are saying. Let's look at another chart where we can see these types of charts. Okay, so look at this one. We're having 1, 2, 3 touches, and this third touch which happened here was in line with the order block in this area, these order blocks, or this base area right here. So we're having a base area, a supply zone, a trend line, and price is dropping like that. This is what we are doing. So first of all, you have to understand the structure. The structure is the one that's going to warn you not to buy here. Yes, you have 1, 2, 3 touches, but because you know your market structure from a higher time frame, you are not going to buy it from this point. And let's look at another example. We have this example: 1 touch, 2 touch, and the third touch. But what is happening is we do not have a very strong order block in this area for us to take this touch as a trade, because our order block is situated right here on top, and this is not in concordance with our trend line. So we will not be taking this type of trade even if our trend line tells us to. But I'm telling you not to do that, because we do not have all the conditions set out for us to take that particular trade. So let's look at another example. So this example right here is good. So in terms of that fake out which I've been telling you earlier, this is how bad it can become if you don't understand the relationship between a trend line and an order block. So this is the order block we have right here, and this is the trend line. But the trend line was telling us to sell from this area, was telling us to sell here. But you know, we can't sell here because we do not have a strong order block in this area. Our strong order block is situated up there, and up there we do not have a trend line. So these types of trades are to be avoided, and you will only be taking trades where you are having a trend line and a supply or demand zone. So this is what we are doing. So this was a bad trend line. So you only need that trend line and an order block for you to take proper trades. So this one was good. We have this zone here. So 1 touch, 2 touch, 3 touch, we have our order block and our trend line. So we'll be taking this buy. So let's look at this one. So we also have this kind of a scenario where we are having channels and all. So on this one, we are going to be looking at the trend line break. What happens when the trend line breaks? So this is what I'm going to tell you. This is best for your entries. So let's say you have gone to your higher time frame. This is M5. You have gone to your higher time frame and you have established your trend is down. So what you are going to be looking out for these channels, because the channels, they are used for what? For retracements against the trend. So the trend is down, then this channel is going to be used as a retracement. So what you are going to be doing is you are just going to be drawing your trend lines to represent the channel. When the trend line break, like in this case, you are going to be using this order block at the break of the trend line to enter your trades the next day. So this channel breaks, you are not entering here. You are entering at the retest of the order block, not of the of the trend line. So this is what we are looking at here. This trend line breaks, and the order block responsible for this break is what? Is this one. So this is what you are going to be trading, and the stop loss obviously is going to go above the structure, above these pins. So this is how you will be trading a trend line break strategy. And earlier I was talking about how you trade a trend line bounce strategy like this: 1, 2 touches, the third touch plus the order block, you are going up. This is a very simple and very effective strategy which you can be using in your trading. So what you have to do is know how to draw and how to identify your order blocks first. Identify your order block and identify your trend line. So this is your trend line, and we do not have an order block in this area. However, we have some inefficiency, but we want to trade with order blocks, not with inefficiency or voids in this case. So this is what we are trying to be establishing here. So I hope this was helpful and you got something from this video. Thank you.